Yo, what's up, Devin, Wesley, John? DR, Stangster, Professor, what up, man? Ronnie, what's up, my guy? Jay, yeah, we're gonna talk about the POI. POI. All right, so let's start off very recap here the previous POIs we've had. Okay, here's the cycle. All right, so POIs we're gonna look at with. So I'm not gonna pull up the cycle. We're just gonna look at these time zones here, which is about 10 to 14 days, so about 2 weeks where the POI plays out. And then we're going to pull up the PFE indicator. I'm going to change this to 62 so we can see it a little better. And this is how we're going to look at it. Okay, so POIs, and this is where you can see it with the PFE indicator, which is a price volume filter. So it's similar to volatility, just a little bit different in the way that the lines here are displayed. So you can clearly see here on all the POIs, there's a heavy little hump. So we got a little mountain here, like the projector, of volume. So that you get around the POI, around that zone. So here you can see that it's very small, but we do have some volume on the POI. But unfortunately, this one was an inverse POI as well. Just like we've experienced with these other ones, there's heavy, heavy selling pressure. Okay. And some of them are followed by a pump, like this one back here. This was a pump and then a dump. Okay. So, even though I was bullish for this POI, didn't play out. It's still part of the cycle. It's still part of the way things work here. And we just keep moving from there, and we keep tracking the next point of interest here. And that is the way AMC is rolling right now. So not looking super good when it comes to this POI right now. So it sucks. It really does. It sucks that AMC is down. The market was trailing up, and now it's taking a breather. Again, we'll talk about the market here in a little bit. So what can we expect? Because I've been getting a lot of questions here, and I'm doing an update today so we can talk about this because a couple of things can happen. So the POI, and this is in response to somebody on the Discord yesterday. Last night they asked if the POI was inactive or if it's not on the table anymore. Well, that's not quite the case. Before we have experienced what is a late bloomer on the POI, a little bit of a late bloomer, not super drastic. It's still in the zone, but this one played out about a week late on the POI. So it's late July going into August. So it did happen early August. But you can see this one back here happened end of March. So it still happened, right, on the POI zone. This one is already coming out. Here's the cycle. And you can see right now we are at the peak, so everything is inverse up to this point, right? It starts to go up, and then it just dumps. Okay, so a couple of things can happen here, and that is based on the current setup, we could be at a double bottom, and this right here, I was saying the other day that if it was going to be a fake out and a massive fake out here, then we would experience a V reversal and this thing would start to pop here very soon. That's a possibility. That would be considered a late bloomer here in the cycle, and we would start to rise very quickly. The chances of that are very slim. That's just my perspective here and the way that I look at some of these dumps that we have. Normally, these dumps are followed by a drag out phase, so we trade sideways for a little while until the next point of interest. We've never had a rally outside of a point of interest range here in the cycle. So that's why we look at POIs here, because there has not been one rally, again, that has played out outside the zone. So until that breaks, we're going to keep tracking points of interest here. It's not about getting them right or getting them wrong. It's about narrowing down the possibilities of when these things actually happen. And that's what this whole channel is about. It's about looking at these volatility zones, really in the entire market, not just AMC. But AMC right now is obviously down, and it's not where we expected it to be. So that sucks. But we keep moving on, man. That's just the way it works. Okay, so I'm going to talk about the bearish case scenario real quick, and which that is what I'm leaning towards right now, just based on the price action. Okay, and I did talk about this many times on this POI. Like, if there was going to be an inverse POI and we were going to have a bearish scenario, I gave you guys the why that it would play out that way. I'm going to go over it here again. And this is where we pull up AMC plus A, because we get the actual chart. If you want access to this, just click the link below on the indicators tab. It'll take you straight there. If you are on the Discord and you click on the info tab, as soon as you join the Discord info tab, you scroll all the way down to where it says AMC plus APE indicator. That one is free. You can access it. Anybody can access that one. And you can add it onto your list. It'll give you AMC plus APE and the previous historical data. So you can see right here, we are at highs, right? AMC plus APE highs, which was that $77 level. So this right here is going to give you a different chart. Okay, you cannot draw resistance and support trend lines based on AMC's original chart, which sucks. You can only do it on this one. That's why we use it. All right, so this is the bearish case. And yes, there are some things coming out next week that could potentially just break this, in that, yes, we do have Avatar that's coming out. And, you know, over the weekend, that might just, it probably will. We're going to get some very bullish news on AMC. And that could potentially be the catalyst here for a late bloomer cycle in which things do start to rally back up. That's the bullish case. So that's on the table, but I'm going to talk about the bearish case because I think this is very relevant. And I think if we continue to trade outside the zone, it won't be an accident. This is still very relevant as far as the cycle goes. Okay. So when I pull up these zones here, which go in with the 4-month cycle. So the 4-month cycle is made up of these 3 different zones. We have the support, the parallel zone, which is very important, and the volatility zone. Okay, so we know on the parallel zone how it works. We are tracking, we stay on this zone for a year. Every year, we come back into this channel. And we're fixing to do that here for January, right? Because we enter that in January, and we exit this zone here right about May time. So 120 days we stay in this zone every year, and that has been following here, okay, for 3 different occasions. So if that is something we keep doing here, we see it again. Well, then we would go all the way back here, okay, January. All right, January, prior to this move to the upside, we did go outside of this support zone for 120 days. It's 120 days that we stayed outside. So we're currently, let's see how many days we've been out here. 3 months. We've been outside this zone for about 3 months. A little bit less. 84 days. Okay, from September. And if we stay outside for 120 days, well, you can do the math. That's 4 months. And the next point of interest is in February, right? So okay, next point of interest is way over here. So if we are in the zone for 120 days and then we come back into the zone, what happens? What happened back here? As soon as we came back in, we created a very small projector on the POI, and this is the June cycle that we're using for the point of interest. You can see how it all lines up. It's all on the same 10-day window where everything happens. So that's where we create the projector, and then we cross the support, the parallel, and the volatility zone. Volatility zone is where you typically that reacts as resistance. You come back in and then come back out very quickly. It's called the volatility zone. All right, all of these come back in, come back out very quickly. All right, so as being the support zone, and we're right below it, we're just hovering right below it, we're probably going to come back into it towards the next cycle. This is the bearish case. Remember that. If things do not come back up like now, then we would trade sideways for a little bit longer here with the entire market and then start coming up in February for the next point of interest. And then this is basically what I'm thinking is, since we did cross all 3 zones at once, I mean, just think of what that would do. A couple of things here. If we do create a projector, say we trade sideways and we do something like that, and then we create a projector here, as soon as we start to go back up and this thing rallies all the way up here, you also have to remember, and this is where we bring back the parallel channel. This is hedging that they're doing every year. So if this theory holds, that we come back into this channel every single year, which we have, then we would come back into this channel on the same dates, which is January. These are it's hedging because these are very important dates as far as the option chain goes with leaps. Also, you do have a quad witching date in between, March. Okay, all of these do. And the dates here would be right around early January to late May. Early May. So here would be early January to May, right here. This zone. When would we come back into that zone? Well, let's see. Because I'm going to take this way back here, like this. Here. And say we do something like, I mean, dude, look at this. Look. Like, you can already tell how similar these patterns look too. Okay, we have like a sort of double top box looking thing that comes into a double bottom, which this does as well. And this pattern is very common before we have major rallies in the market. Okay, it's kind of like a projector, but it's not. We do see it happen a lot here on AMC. And you can see a similar structure in this pattern. So the points of interest here, everything makes sense as far as this pattern goes. So this would be the other scenario, and it would be I think a stronger one, because now you are really suppressing the price and you're not letting things go immediately. This is very quick. It'll happen very quick, and then it'll come back down very quickly too. So not super ideal, but as we've seen things happen before here on the parallel channel, I think this makes the most sense based on what the price action is doing now and where we are now. Okay, so this is the bearish case scenario. I've talked about this many times before. So I think this is what's currently playing out. And we're just going to let it ride, man. We're going to let it ride and just stay optimistic here on the price. No need to, no need to be concerned, or I mean, I'm not concerned. I'm letting this thing ride out until it pops, okay? It is what it is, man. It's the stock market, all right? Stock market is sometimes I mean, it is stressful because we know it's manipulated. We know that you kind of have to do your your DD, right? You do your DD and you come up with your theories and what works for you. But, it's not always going to go in your favor, and that's something you just have to deal with and understand. I mean, I understand that. It's already happened a couple times on the last cycle here. It played out inverse, so that was an incorrect projection that I had. And then on this cycle, it happened inverse as well, so that was an incorrect projection that I had as well. And, not always going to get things right, but what I do know and what is true about this cycle is that no matter what, all of these points of interest that keep happening have always happened, and I think will continue to happen on these very small time windows that we keep tracking here, which are it's about a 10-day to 2-week range. I don't think that's changing, dude. I think there's a clear correlation with that, and it's just about narrowing down narrowing down these dates, tracking these dates. Keep going with that, but that's the update I have with AMC. I also think that if we continue to track and trade sideways here, it's important to understand that since the price is not doing much, and we've seen this happen with other stocks in the market, you have something called sector rotation. What happens is some stocks will pump and rally and have a lot of volatility, while others are trading sideways and they're not doing much. They're prepping to go up for their turn. They take turns. Okay, that's what the entire market is doing, is just taking turns, right? One by one, they're all taking turns, using leverage against one another. And there's a lot of opportunity in the market for that. I know a lot of people just want to focus on AMC and they don't want to, give other stocks or other securities a chance. But the whole thing here is to know that, AMC is definitely opened up all these possibilities for everything else in the market, all these other stocks and cryptos. I think that's a very important thing, and I would never give that up for anything else, man. I mean, this is AMC has opened that up, opened these possibilities up for everything else. So I'm very grateful for that, but it's also been a pain in the ass, and we know that. We all fucking know that. But that's okay, man. Again, that's part of the market. It is part of what it is. All right, let's look at the chat. Let's look at all these comments. Okay, so now that I covered AMC, I'm going to talk about the market here because the market is down today. So a couple of things to note about the current market state, which is it's a clear bear candle as we see right now. Yesterday, that was not the case. Yesterday, we had this was a green candle. So if you go back in time, you replay it, you might be able to see it. We'll show on the weekly chart. So this is another thing to talk about here. We did cross resistance and got rejected. Now, the projection, and this is what I'm saying here, guys. The projection we had from the start here in October was a clear push up to resistance to around the 420 level. We got to 414. This was a 414 level 2 days ago, pre-market. So $5 away from 420, and then it got rejected, right? So that was a major level of resistance. It could have went all the way up to 430, but now we have a clear rejection. Like, this is pushing down, and it's pushing down quick. So two things to note about the current market state. This does not mean, for one, that the market is going to dump and go below previous levels here all the way down. This is probably a short-term breather here in the market. And what I mean by short-term is probably about a month or so, in that it will potentially come close to this 375 range and trade sideways for a little bit before going back up. Okay, so this basically would have been the level of resistance that we were calling for, 420, and now it's being rejected very quickly. So and there was a range that we were tracking. It was between 430 to 420, and it just happened to hit the 414 level. So this to me is a clear rejection. I mean, it did get canceled out very quickly, and now we're trading at 389 currently, and it would be pretty hard for the market to pump back up very quickly. So this is calling for a short-term fake out breather here in the market with everything else we see with AMC, the crypto markets. So this does change things a little bit. It changes some of the POIs that we're tracking, and we're preparing for that possibility here. So I'm going to pull up the quad witching setup that I had here. We're going to talk about this. So on the previous quad witching dates that we saw here in the market, something that I pulled up were these levels. Okay, these are all price and date ranges that we tracked. And ever since December of last year, so this one doesn't count because it's not part of the year. We're doing four. There's four quad witching dates here, option dates. And this was the projection that we had for this week. Now you could see here from the bottom, it rose. It didn't rise up to 7%, but it did rise up to 6%, which is huge. Because every single quad witching date here had at least a 7% rally. So this one right here was a 6.8%, so closer to the one that we currently had. Not as much volatility as we've seen, but clearly it got rejected. It was a pump and then a dump. And it's not over yet. It is not over yet. If you flip the chart, we could still get a potential continuation back down. It is only Thursday. So this thing could keep pushing down to 382, maybe even 370 or 378 around there. That would be an 8% dump. And that would be part of this volatility move that we talked about. Every single quad witching date had that. Now, why I think that we are potentially moving towards a more bullish market here now that we've been on this downtrend for a year is the curve lines that we're looking at here, right? Which I do have to talk about AMCs because that's going to change some stuff as well. So here's the quad witching curve for SPY. Starting in December, very clear downtrend, and then here, what's happening is we're just trading sideways, but we're going up. All right, so this is we're actually closing, which is kind of crazy. The previous quad witching date, we closed at 387.15, so they're hedging for this. I mean, guys, nothing in between matters at that point. That's why I'm saying, like, they come back into the same hedging price. They're doing that for a reason. You can clearly see here that the price is coming back to the same levels that it did on the previous quad witching, which was September 20th. All right. So currently I have the trend coming up, but following every quad witching date, there is typically some kind of volatility right after, and it's like a shift in direction, which is pretty crazy. So why we're going to experience some pretty intense price moves in the next couple of months. So here, December 21st, it pumps, and then this is where you get a dump, and then it's a clear dump. Like the direction here is bearish, okay, and it's bearish until the next quad witching date. Same thing right here. You have another pump, and then a clear dump until the next quad witching date. These are all lined up in different colors. Here in September, when we were trading at 388, we had another dump and then a pump. This was bullish. Okay, so this was the first quad witching date where things actually started to reverse and not close below. Because this one here was more of a cancellation. Now this one here could go both ways, but what I think is going to happen is, so now I know that it's not quite over yet, but it's leaning more towards a bearish, or at least a short-term bearish quad witching date. So maybe I'm going to say 390 for now. If they do sort of Ivy crush this, if they Ivy crushed it, actually, we'd be at like the 400 range. So I'm going to leave it there. Right around there. And this is just a projection. You can see that here. I mean, these look the same, right? They would look pretty similar. Just sideways price action. And then what happens from here? Well, we've seen on the other POIs. Take it for example. Right here, we had the price action going down. Here we have it going up. So here it goes down. We close on this range, and then we keep going down. So here what might happen is we might keep going up, right? Because we're still bullish here. Doesn't matter if we trade sideways for another month. Into January, we could see this just turn around and start climbing back up the market. Let's see. Let's do this. Flip it. From the quad witching date, or it might just do it, you know, it might do it quicker than expected, but I think for now we definitely need to establish some levels of support first, and before we get ahead of ourselves here. But I think anything could happen in a week, as we've seen this week. Price go from 414 all the way down to 388. It's pretty crazy stuff. All right. Here's another thing, guys. We are in a parallel channel. The market. So we entered the parallel channel right here. Actually, I'm going to go on the daily chart for this. And we're just bouncing off of these walls. Okay, back and forth. And now we're right here. We're at support. So is this going to hold? We could see something like this too. These are fake outs. Okay, where it comes back in. We've already talked about the level that we're tracking, which is potentially 380. Maybe 379, and then get a cancellation on that wick. So it comes back into the channel and then potentially starts to climb back up. Okay, that's a possibility, but we are in a parallel channel. All right, quad witching curve for AMC. How it's going to change. So if AMC does not close above $9 this week, which I think is pretty unlikely to happen, then this would be the first. This would also be the first time that we close. And this is just looking at the previous quad witching curve. So it would be us closing below the previous quad witching curve, which is not a good thing. It becomes a short, at least with the cycle, and also goes with the other thesis that we would trade outside the support zone for a little bit before climbing back up. You can see the same thing happen back here. Okay, it's almost the same setup. We're on a downtrend, and then here we come up from the previous low. So that's one where we trade higher, and then this one is where we fell back down, right? So we fall back down, and then the next one even falls back down as well before climbing back up. So it doesn't have to be this way, right? But here we can clearly see that we are not up here where the trajectory was pointing. It's bullish. Now it's a little bit bearish, right? So this is a good way to look at it. Changing this a little bit. Should be March 17th, but whoa, what happened there? I don't know why these are shifted like that. There we go. Think about TradingView, man. Think about TradingView. All right, here we go. Is the next quad witching date here in March, the 17th of March. And so the curve here would start to look a little bit weird. I mean, there's no clear correlation with this. Would probably have to end much sooner for the curve to even make sense. From the highs, it would have had to. I think it would have had that end of it. I'm twisting my words here. I don't know, something like that. I have to make this a lot prettier. It doesn't look that good right now. But so it changes. That's the point. The point is that it changes. And it just looks different, right? But it definitely did change the curve, and now we are essentially looking for a bullish move here in the next on the next point of interest going into this quad witching curve, which would change it, right? But we do need to close above it. Now, this also goes, and we're not going to be able to see this here on AMC's chart because of the scale difference here between AMC plus APE, but it would go with this parallel zone theory in that if we close around this range here, which is around 19 for the quad witching curve, then that means that we would have to be trading on these levels where we see AMC go into every year. So AMC plus APE would be around 26 around that date, and then just AMC would be around 19. So it kind of makes sense with adding them up together. Just another way to look at it. Okay, I'm going to update one more thing here. We had two patterns we were tracking. We were tracking, and this is more of a pattern analysis, not so much cycle. So we also look at pattern analysis here, and that is we had two major patterns we were tracking, one of them being ARPA, and ARPA was a huge discovery here that we found a little bit ago, and I still have the ARPA pattern. But you can already see how it's tracking this as well from like a bearish standpoint. And we hit this POI to a T. So the ARPA pattern here was tracking a lot better than the Ethereum one. We had everything up until this point hitting all the POIs. It was a minor POI that got rejected back down. And with POIs, another way to confirm that they keep happening on these zones, we keep the ARPA pattern here. We pull up the cycle. And where do we have the next point of interest? Well, all you got to pay attention to here is when there's a lot of volume coming in, which is right here. And when does this happen? Right here in the cycle, right? So just another way to confirm it. I mean, that things keep happening on the POI. So it's very likely that if we do trade sideways and then that we are bearish for a little while, that we're going to go back up here until it stops tracking this pattern. But so far, this pattern is being tracked to a T. And I think it's the most accurate pattern that we've seen on AMC so far. I have not seen a more accurate pattern play out here. So this is more of a bearish case. It sucks. I do have the entire ARPA sequence. I don't know if it's on another chart. This happened a little bit ago. So I'm going to have to pull it up. And I believe when I tracked this, I was like on the second chart. So I was able to get a very detailed version of this chart. But I will say that ARPA ended up going up quite a lot later in here. Like it actually started to rise back up very quickly. So that is one thing to note here. Even though it trades sideways forever, we do still see it go up again. Actually, let's try and find it here. Let's see if we can find it. ARPA. Why is it not showing up? Oh, that's why. And it wasn't ARPA. It was ARPA Premium. We're using ARPA's Premium Index. This is exactly... See, here it is. I even have the pattern is still there. Still active. So let's see if we can get it. Let's go on the minute chart and see if it lets us scroll all the way back. It should. Yeah, but it might not, and that's... Oh, no. Yeah, it happened a little bit ago. Damn. Okay. I want to get I'm going to have to just get the entire pattern here, or else we're never going to be able to find this again. Here it is. We flip the chart. There's AMC, guys. Okay. And this is the thing. This is a premium index chart. So here is where we see it go back up again, but then it trades flat. This is why I'm not paying too much attention to this part here, and it's just considered noise, because the premium index is, just think of it like options, right? Options, when they have high premiums, that means volatility is high, or it could be very low depending on the security that you're looking at. If it's a SPY, it tracks inverse to volatility, so it's going to look different. But since it's a meme stock, AMC, it's when volatility is high, that usually means that the price action is going up. So same thing here with ARPA's premium index is like when the price action is just flat, that doesn't mean that it's not going up. It just means that there's not that much volatility in the market. So this right here is not as reliable as you want it to be. All this is going to do is give us these points of interest, which are these spikes that we're looking at here. Spikes, and that's exactly what the PFV indicator does that I have and that I made here. It does that. It cancels out all the noise and flattens it out so that you can clearly see where there is volatility zones in the market. So it does something like this, right? That's what the PFV indicator does. All right, let's take this pattern all the way over here. We already know. Whoa, this is a big freaking pattern. What the hell? All right, well, yeah, this is huge. Again, it's a premium index pattern, so I'm not relying too much on this. I'm relying on this pattern up until where there's very little going on. I will look just to look at this a little bit here, some of these POIs. I'm going to minimize this one here for a sec. ARPA. POI. POI. Sideways, right? Here we have a POI that's it's definitely there, but you can see it on this cycle here, which is inverse. We've only seen that happen once before, and it was right here. It goes up when the cycle on the red portion of the cycle, but never in between. We never see one in between. And then here again, you can see it on the peak. So all of them are lining up on the peak, and this is also the 4-hour chart, so that means that a lot of this data here that we're looking at, since it hasn't happened yet, it's going to be incorrect because it's not. Data points here are displayed differently through the entire market. All stocks sometimes have smaller data, and then if you try and project something or predict something, you post it, it's going to be incorrect because the data points haven't came in yet. But yeah, you can see that on a range, it is going to be a small difference but over time, it's obviously going to affect the way the cycle looks. That's why you do have to shift the cycle according to the dates, not the way they look. The dates are important here. Okay. All right, guys, I'm going to go live. I am doing live trading on Discord. If you guys want to join, again, I do have a promo going on, 50% off until the end of the year for the holidays. You just have to click that link below, and I am trading crypto as well. I started trading crypto, focusing on that as a little bit more, and then also stocks. It's like a 50-50, but I send out a lot of crypto alerts in the after-hour sessions since a lot of the volatility comes in around then. And you're going to see me post also, so I'm preparing you guys for when AMC is dry and we don't have that much going on in the cycle, and it's in its dry moments. There's a lot of other stocks in the market and cryptos that are going up. So I want to focus on that part of things too. The whole point here is not to focus on one stock and hope for it to come up at some point. It's to make money in the entire market and using this gift that AMC gave us to find other POIs and other cycles in the market. So you're going to see me post about a lot of different things here. I want to make that clear. And yeah, we're going to go from there, all right? Alrighty, guys. We will see you soon. I'll see those of you on the Discord here in a little bit, setting up, and then we'll go live. All right. Bye-bye, guys.